Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner and partner at Beaver Creek this year as well. September 9th, Don and I will be, I think, the second presentation at the entire conference this year, doing it live on stage. So, Don, welcome.
Yeah, we got a pretty prime slot, didn't we?
Yeah, yeah. Well, I'm excited for it. It's always an honor to be there. This will be my fourth year in a row, and I think Misha and Jessica put on probably the best conference that I've seen in the junior space for gold and silver related, and they also have other names like copper and stuff that they'll have from time to time. But man, this year is sold out, and I'm trying to get some clients there, and it's difficult to get clients in. I mean, it's just really going to be, I think, an electric time, September 9th through the 12th in Beaver Creek, Colorado. So, Don, let's kick it off with some macro. You and I talk pretty much weekly about the conditions out there. Since we last recorded, we had a Fed that didn't surprise anyone with doing nothing on Wednesday the 30th, but it also wasn't surprising to me that Trump went after Powell immediately in bold caps via Twitter about not cutting again. There were two dissenting votes this time, which is the first time that's happened since the 90s. And then August 1st, we got the non-farm payroll number. But what was interesting to me wasn't that the non-farm payroll missed on the headline, which is also kind of contributing to your thesis as well as my thesis that we're entering a recession. But they revised the numbers down substantially month over month. And I think that, is what caught people's attention. What did you think?
Yeah, the non-farm payrolls are basically a big wake-up call on Friday. They were actually fairly stunning. The downward revisions for May and June were absolutely stunning. And then you put that in tandem with what the economy's been doing this year. Basically retail sales is flat for the whole year. There's no growth there. You have the housing market is slowly rolling over. So PMIs have been negative for 29 months in a row. I've been saying this, that Wall Street has been cherry picking the data, only looking at the positives and just ignoring all those negatives. Today's a perfect example. It's Monday. Market's up over 1%. It's like the non-farm payrolls didn't even happen. It's starting to really feel like this crack up boom where it's going to take something to stop it from going higher, and this isn't it. It's like it needs something potent. I mean, this non-farm payrolls was potent. It wasn't potent enough. The market wants to go higher. It's crazy to me. I don't know when it breaks, but we're in the gauntlet period right now. We're in the gauntlet. The gauntlet is this is the worst seasonality of the year. Wall Street hates September. They hate it. They want it. Middle of August to the middle of October is the gauntlet. It's like 2-month period. They hate it. It's like all they're doing is just crossing their fingers and hoping that they can get to the middle of October without a significant correction. They're hoping and praying that the correction is only 7% maximum. Mm-hmm. So that's a big key number. If we go below 7% on this correction, it's that's when we're starting to get nervous. We'll see what happens. I think it's going to take a Bear Stearns type event, but I think it's inevitable. I mean, we're seeing the economy slow in here. The only thing that's going to restart it is what? I mean, lower rates. They're only going to lower rates maybe 1% over the next 6 months. Is 1% going to do the trick? Probably not. You're probably going to have to go down 2%, which would require a crash. I mean, the only way that Powell's going to reduce 2% is if he gets a crash, right? It's the only way, because he's still trying to get his hands around inflation. And the last thing I will say is tariffs. Now, everybody thought that Trump was going to be Taco Man on tariffs and that we were only going to have a 10% average across the board. We're at 15 right now. Today, I've actually heard a whisper number 18. So instead of 10%, we're getting 15. 15%, that's a pretty big increase, and that's going to create headwinds. So connect the dots. Is the economy really going to pick up steam here? Is Trump going to lower these tariffs down to 10? No, he's not. So we got high tariffs. They're not going away. We have a slowing economy. It's not going away. So when you connect the dots, you have to be nervous.
Yeah, great assessment. The non-farm payrolls reads he's going to get another one in September, of course, before the September 17th Fed meeting. And then you've got two CPI reads coming up as well, the most recent coming August 12th. So I don't think you'll see much in the August 12th read in terms of the effect of tariffs, but maybe in September and beyond we'll see that. And then that might be another reason for people to start getting more nervous, because if you remember when we had previous corrections when CPI was going berserk, that was when people started to pay more attention, right? I agree with you that the amount of bullishness in the broad market right now is insane. What's interesting alongside of that, though, is you've got earnings from Newmont crushing, about 10 days ago, NEM, Agnico on July 30th, after the day that the Fed announced, came out and crushed earnings. You're seeing just really good performance in the gold producers. I think Agnico's ASIC was down below 1,300, which is insane. I mean, the free cash flow is just insane. So I think what's going to happen here is we're going to see better results from the bigger cap names in our sector, and then that will be going on alongside of this rally in the broad market, which we're seeing right now. And then at some point in September, in my opinion, you're going to get smart money going towards value and away from growth, because right now growth is clearly in vogue, and value is doing okay, but it's more of a rifle approach. So yeah, I think we're very well positioned. It just doesn't feel like it. And I've been telling my subscribers and clients, July and August, those are the months you want to start accumulating positions if you haven't already, because this is the time where you will get some dips. We bought SILJ on Thursday or Friday, which is the silver equity version of GDXJ, more aggressive. Has a lot of the mid tiers that you liked on that you call the Mormons within that ETF, and had a beautiful day today. So, I mean, I think those are the kind of things you look at. Is you're not going to get multiple weeks to get a decision made in buys now like you used to. You have to be decisive and put positions on more quickly.
Yeah, I want to mention two names real quick, and then we'll bring Brad on. So the first one is AngloGold Ashanti. This is a stock that I've kind of ignored, thinking it has a little bit too much risk, location risk. But if you look at their producing mines, they are very well diversified. They actually don't have significant location risk. They're not in South Africa anymore. They left that.
Yep.
I think they have one mine in DRC, and that's pretty much it. They have, I think, one in Egypt. Those are the only two mines, but they've diversified, done a really good job. That company, unbelievable free cash flow. They're trading at a 6 multiple. So Newmont's like 9, 10. AngloGold's at 6. I think it's going to go to 20. So what people don't realize is that when you get a multiple that doubles, your share price doubles. So AngloGold, they're probably going to double twice. So you're probably paying 25% its value. So it doubles from 6, it goes to 12, and possibly doubles again from 12 to 24. Now, maybe AngloGold doesn't get to a 24 multiple, but they're going to get to the high teens. So, I mean, so the multiple expansion, I mean, I own it through mutual funds. I own 3 mutual funds, and it's in it. But I was really surprised. So AngloGold Ashanti increased their dividend to 80 cents a quarter, which is 6.5%. So you're getting a 6.5% multiple, dividend payout on a company that's going to go up in value probably 5x, just multiple expansion 2x, but probably 5x. That means your dividend could go up 5x. So you could actually have a yield of somewhere between 20 and 30% if you bought it today. So I'm looking at these companies and I'm just going, wow. I have one other company to mention, which is Northern Star, which is valued the same as AngloGold Ashanti at a 6 multiple. I've added shares. So I bought it for the first time last month. I paid less last night. So it basically crashed 30% last month on it. And all they did was barely miss. They were saying last year, the fiscal year ends in June for Australian companies. So they just did their year end in June and they missed barely. They said that they were going to produce 1.8 to 1.65 million ounces. They produced 1.63. They just barely missed the lower end and they went down 30%. Absolutely insane. And then they have the Hemi project, which is a 10 million ounce project in Western Australia that De Grey Mining, they bought from De Grey Mining, that's not priced in. I'm like, this is just, we're seeing some evaluations that are just insane. So I just want to mention those two majors. I mean, I'm not a big major guy. I'm after five baggers, but guess what? Both of those majors are 5+ baggers. So I'll end it there.
So yeah, thanks for those, Don. I would say just real quick to piggyback on my silver comment, silver is our biggest holding right now, SLV or physical silver, mostly physical for us, SILJ, SLVP, SIL. Those are the three major equity ETFs that we own in silver. They probably add up to about 10% of our portfolio. So right there, we've got about 20% of our portfolio in four things that I think are going to do extremely well as we move forward, because silver's ascent is not done yet, even though it's gone up quite a bit year to date. It's playing catch up to gold. And we think that some of the smaller producers look very attractive too. You know, you've got Guanajuato silver, you and I talked about a week ago at 20 cents, trading at 21.5 now. GSVRF in the States, GSVR in Canada, great volume on that stock. A lot of clients complain about liquidity in juniors. That stock's very, very liquid, and, it hit 26 US here recently on decent volume. It's 21.5. It's going to retrace right back to 26, in our opinion, before year end. The other one that I've been looking at and talking to them today actually is SilverX, AGXPF, just to get an update from Jose on how they're going to fund that project going forward. But both of those stocks have gotten a bit battered because of their higher costs, and that would be AISC, all-in sustaining cost per ounce. But I think here at 20 cents again, we bought a little bit of SilverX today. We bought a little bit of Guanajuato, just nibbling away on a day where Canada's closed. And you might see some really good things out of stocks like this going forward.
Yeah, I was going to stop, but I have to mention something about SilverX. I mean, they're mining less than 1 million ounces a year of silver right now, and they have 100 million ounces in the ground. So they can figure out a way to get their production to, say, 3 million ounces of silver a year. I mean, that stock's going to fly.
That's a great point. Think about this, right? America's Gold and Silver, USAS. 2 years ago, those guys couldn't raise 20 million bucks at a clip. 25 million. Now they just raised 100 million. So things change, right, in sectors, and you have to be flexible as an investor to say, wow, that's different. When we saw them bring on that antimony recently, USAS, we doubled our position that day, and then they came out with $100 million check, and then we added to it there. And then today it's up 9-10% on a day where silver's up 1%. Tremendous leverage, and so those are three little producers right there for people to take a look at.
We need to get Paul on the show. Paul Hewitt, the CEO of American Silver. I've been a fan. I was a fan of it before he came in, and then once he came in, I love it now.
Yeah, it's a decent position for us too. All right, well, with that, let's introduce our guest today. We're excited to have Scottie Resources with us. We've got the CEO, Brad Rourke, and we also have the president, Thomas Mumford, joining us from location. Hey guys, how are you?
Well, thank you.
Good. Well, Brad, would you be kind enough to give us maybe a 7 to 8 minute overview of Scottie, and then Don and I will ask some questions of you and Thomas.
Sure, absolutely. Thank you for your time. Great to see you guys. So Scottie Resources is a exploration company transitioning into a development company as we speak, but we operate in Northwest British Columbia in the prolific Golden Triangle. So I imagine everybody on this call understand one of the most important districts for mining on the planet Earth. We centered this around a past producing gold mine that operated in the 1980s. And what got me involved as an investor a long time ago was it produced a half ounce per ton, and the Bruce Jack power line was going right beside that. Since then, we've accumulated quite a large land package, 58,500 hectares, 7 past producing mines, all near in the southern end of the Golden Triangle. And that's 100% paid for. There's not a JV, and we don't know a dime for that. So we've We basically have a company in one of the best areas to be with a very enviable land package. And what I can emphasize that would make Scottie a little bit interesting is that we're blessed with all the infrastructure that one could want, where we have road access to our site, we have flat land on our site, comes with it an old existing mine permit that's in care and maintenance right now. The Bruce Jack power line is on our property border, and I'd say maybe 500 meters from the first adit into Scottie Gold. 40 kilometers down that road is a deep water shipping facility. That's where the Bruce Jack ore goes. That's where the Skeena ore is going to go, and Red Chris. So when, the Golden Triangle is wonderful, but it's out there, right? If you look at the Sea Bridge, it's just north of me, the world's largest gold deposit on the planet Earth, just north of me. As the crow flies, Bruce Jack mine is 20 kilometers. And then just to the south of us is the old Premier mine. Now they're having a little bit of issues right now, but there's a fully functional mill just 15 kilometers or let's just say 10 miles down the road. So we're operating in one of the best jurisdictions to work in, and there's nothing on our wish list as far as infrastructure. And then I'll let Thomas speak about geology in a bit. But when you look at that, people have to consider development costs and how it takes these things to how much costs are involved in developing these things. Where we're going to show a model here in the very near future. We've been talking about it. This DSO project. As you can see, some news here that we put out in the last couple of weeks is that we have some strong partners that also believe in our vision that validates what we see. So, we're in the right area. We've got the infrastructure. You have a commanding land position. Our capital structure page. Now, we're not going to bring up figures here today, but hopefully we entice people to just dig in deeper and have a look at, compare us to what other opportunities there are out there in the market. But we have a very nice, clean capital structure page, just under 50 million shares outstanding, and a whole host of really, really solid names that have been supporting us. And that would be, as of the news we put out a couple of weeks ago, we just took a $6 million equity position from Ocean Partners. Now, there are metal traders around the world. But with that comes a $25 million US facility for the last mile of financing to put this project into a position where we can monetize the ore body that we found. On top of that, about 18 months ago is the last time I ever raised money. And that money came in from just kind of two entities, Franco-Nevada and Ross Beatty. Now, what's interesting about the Franco-Nevada piece is, as far as we know, we're the only company in the history of Franco-Nevada to buy a royalty from without a resource. And we have since put a resource out. And they also gave us equity, which is unusual. They have given equity to other people before, but it's just a little tiny company who's a Scottie to be able to garner attention from those types of entities. Now, rest assured, with Ocean Partners or Franco-Nevada, I've done a few bought deals in my time, and that's a lot of work to go through all the ringer with all these banks, but is nothing compared to what Ocean Partners and Franco put us together. So from an investor's point of view, that should give confidence and validation that we have a vision, that we're talking about what we think we can do, and they've bought into that vision. And it's nice to see Ross Beatty owns 5% of the company and is continuing that with the financing I'm in the middle of right at this moment. We're just kind of finishing that off. So we have the endorsement of a lot of key players in the industry, low share count. I can put 50% of the stock around a dinner table. So we're nice, tightly held, and we've been plodding along year after year after year, just kind of waiting for the market to change, and then maybe really blast that out to a retail crowd. Now, what's happened of late, which kind of made us shift focus, where a year ago we're an exploration company coming out with great results. We're doing this great work. Never could get that market to allow that stock price to go up, so the cost of drilling more meters is cheaper. the neighbor, I think people just assumed that we would be a dovetail in there with the Premier Mill or the Ascot mine that's just on the same road down the hill from us. Now they've come up with a few issues, and we hence went, well, look, we're one of the closest mines on the planet Earth, as close as we are to a deep water shipping facility. China has overbuilt copper smelters to the tune of, I might get the number wrong, but I think there's 127. But from our kind of smelters in Asia and China, but about 30 too many. And what that has done is the TCRCs or the toll milling charges to put ores into there. They're fighting for it, just economics, supply and demand. These mills need to be filled. Hence, this is what Ocean Partners saw. But when we saw that Ascot was kind of stumbling a bit, we thought, well, we better take our fate into our own hands, and we just need the market to see what our ore is worth compared to, because it's not always apples to apples. There's different mineral deposits, and I don't have to explain that to you guys. But we put that resource out earlier this season at 700,000 ounces of high grade ounces, but we did that with only 55,000 meters of drilling, and we started doing the economics on this DSO project just so we could price our ore, because we're just, we believe we have a lot more value than what the market's recognizing. So that's the path we're going to. And from that, I'll let Thomas speak a little bit about the rocks, and maybe you can just finish off with the DSO, Thomas, and just so the audience can get a little bit of Thomas's personality as well in this. But I mean, covered the jurisdiction, the infrastructure, the capital structure. And I'm sorry, and we won't dwell on this, but we've got a really strong board of directors, of which I'm proud to say nobody knew each other before the formation of that board, and they all have distinct skill sets in this industry. So they run me, I don't run that board, and it's something I'm very proud of. But with that, Thomas, maybe you can speak a little bit about the geology, what we've accomplished, and then you could probably transition into a little bit more of the DSO, and we could take some questions.
Sure. Yeah. So, I mean, our project's at the end of the Scottie, at the Grand Duke Road there. And what it is, it's a past producer that's situated on a high grade vein system. So it's pure type pyrite rich veins. In the past, the cutoff grade for the mine was 10 grams a ton. The average production grade from the mine was 16.2, and the head grade was like 18 grams a ton. So very high grade mine, past producer. We made a discovery about 2 kilometers away, same mineralizing style, same age, same mineralizing event. And that's the Blueberry Contact Zone. And so together we put out our first resource this spring, as Brad said, 700,000 ounces of gold at 6.1 grams a ton average grade between that. We see that as an open pit underground mine. So open pit and underground at Blueberry, and then underground at Scottie. And that's really what we've been pushing on. In other news, like we've got a permit for a bulk sample. We've done our first blast on that bulk sample now. So we're going to be producing out of that here this season. That's going to give us a tremendous amount of information on, comminution testing, the metallurgy of it, and just showing this proof of concept for this DSO project, where we're going to ship things down out to the port to Stewart and get this project moving.
Well, thank you for that. Brad, I'll start it off. I just wanted to get some more detail when you said about 50% of your 50 million or so shares were in good hands. Don and I love that. We always tell people we look for stocks that have 30% or more ownership so that we can avoid a take under, like we saw with Marathon in Q4 of 2023. Can you talk a little bit more? You said Ross Beatty owns about 5%. Can you break it down for us as to who owns what?
Yeah, the breakdown would be, I have about 5% of the companies still today, and I bought I didn't start this company. I bought my shares as well. Between Ross and I, let's say that's 10% of the company. Now, somebody we didn't mention, is so important to our team, is Kevin Jennings. Now, Kevin Jennings owns about 11% of our company, and he found us about 3-4 years ago when we were putting out these fantastic results. But his claim to fame, or his last job, he was CFO Barrick Africa, but he's a financial modeler of mineral deposits. And if you look at his resume and what he's done around the world, it's very flattering for him to be at this level. So he has 10%. Ocean Partners is going to have over a 10%. And I'd also like to say, and Don, you might like this, is that, we're going to close up a first tranche in the next day or two, and then the next in a week or so. But the Ocean Partner shares, they're in a box for 2 years. They're not allowed to trade their equity for 2 years. So that alone right there, just take half this financing I'm doing, and they've made a commitment to hold on to that. Talked about Ross Beatty. We have Conwave out of Switzerland, owns, I think, just under 5%. Eric Mayer, now that's well-known, very smart individual in the world here. They don't come lightly. Again, a lot of questions and not just writing checks anywhere. There's another private gentleman out of Switzerland now. I'm not allowed to say his name, but he's been supporting us for 4 years and kind of brought this Swiss connection into our group. And I'd suggest he's about 6-7% now.
Wow.
Yeah, and then just a whole host of people that I've known from days gone by. I'm talking to these people at least once a week, and they'll have more than 2 million shares or more. But there's these people, an ex-banker who lives in Ireland who worked out of London. He has a 3 million share position. But again, he's, no one's going to know him on this side of the fence. So really, I've been target shooting when I've financed. A lot of the money I've raised myself personally. Now, we have had assistance from a few of these investment banks, but I tend to like to do things non-brokered just so I can read the name on the subscription agreement. So again, it's important to me. Now, I've done other things in my life, and I used to run a financial services company, which would be much like what an EMD is today. So, I've got a little bit of experience in this sort of stuff. So it's just really important to know who's holding your stock. And so for the most part, I've looked in everyone's eyes that have held on to that. So I comfortably, now if we're going to just speak, I feel very comfortable saying I have 65% of this stock that I speak to at least once a week. That would leave my whole float traded this year, if I'm correct in what I'm saying. So, if someone wanted to do the math and you look at how many shares we've traded this year, and we haven't gone up or down. So it's, it's tightly held. We haven't done a lot of promotion. In fact, we held back. Last year we did a smaller program because the market just wasn't there, and we're going to hold on to this until the market's right, and then we'll be able to. All these people who have supported me up to this point, they're going to get a return.
Okay, excellent. Thanks for that. Also, you'd mentioned about 3 drills. Well, you didn't. I don't know if you mentioned it, Thomas, that 3 drills are turning, but you have 3 drills turning right now, correct?
Yeah, we've got a big program going on right now. So we've got 3 drills turning right now. We're in the middle of that excavation of that bulk sample that we did at surface, and we've started environmental baseline work right now. So we're looking at a 2-year target for that to finish up that baseline work.
Okay, great. So Brad, one more question, and then I'll turn it back over to Don. You mentioned about looking at all the subscription agreements and stuff, and that's something that is kind of unusual because in our sector we find a lot of times people will just take money for the sake of taking money. So how is the financing going? I know you can't tell us like everything, but in your view, how has it been? Through today here, August 4th.
Well, I mean, I still got about $2 million to fill, John, but I think I have it, and I'm just waiting on, these, we've had, even over the weekend, did some work on the Zoom and with Kevin and I and such. So again, I haven't blasted that out. I've got, let's say I counted, I had the first 9.5 million. It's a total of 12 million, but it prints 16 million because of the charity flow through function. But let's just say I'm raising 12 hard dollars. The first 9.5 million was with 10 names. So that's kind of how I've been.
Great.
The average size is well over $250,000. And again, I just kind of been picking through the list, tried to always offer to our existing shareholders. And you've been in the business a long time, man. Who's dumb enough to raise money in the middle of the summer? Just me. But although there are things getting done, and it wasn't that I chose this time, it was that Ocean Partners deal. It probably took a month longer than I anticipated, and so it just is what it is. So can't get a hold of everybody, of course, because they're all doing it at their cottages and stuff. But so again, I haven't thrown that out, and I'm not dealing with a bunch of brokers. I'm smiling and dialing every day. Yeah. So I think I'm there. I knock on wood, but yeah, and it would fall in line with what you see on the paper now. Again, my biggest problem is such a small market cap, but I'm targeting these bigger entities, and so it's unique. But we've seemed to have landed a few, and yeah, I anticipate we'll probably see something else that's in line with the names that we've already spoken about.
Okay, great. That's helpful. Yeah, so double the amount of calls here in August than you'd want to be making, but you'll also avoid the rush of Beaver Creek, so that's positive. Because I think everyone and their mother will finance in September. So,
well, you know what? And one thing I know we just didn't mention either is, we got Catalyst, or maybe Don's going to ask questions. I'm sorry. We'll just let you keep going. Yeah. Yeah.
Sure. Yeah. I'll turn it over to Don and then we'll fill in the gaps. Go ahead, Don.
Yeah.
Yeah. The first thing I'll say is, I followed Scottie for 10 plus years. Exploration companies, I wasn't that excited because I don't really like to chase drill holes. But the minute they pivoted to development, the very same day I bought shares. I didn't hesitate. It's like, whoa, that's my story. So the reason why I didn't hesitate is because, first of all, Brad's mentioned that the valuation is kind of crazy cheap. So they have 55 million ounces, 55 million shares outstanding and trading at a dollar Canadian, 66 cents US. So it's $38 million market cap for a project that has a path to production, has a very strong team, has a very excellent infrastructure, fantastic location. Now, I always talk about, I'm actually going to share my screen here and show you guys, what I look for in developers. So here's my developer checklist. So the first thing is a strong project. So the grade is right now it's 6 grams, which is fine. Open pit and underground. Recovery rate's going to be fine. Mine life currently short, but I expect this thing to be at least 2 million ounces, and I think most likely more than 2, probably 3 or 4. That's the reason why these big names are coming in. Economics, we're going to get a PEA this year. I think it's going to be really solid. High upside potential. I have this thing printed as a 15 bagger, and it could do a lot better than that. So, when you're paying $40 million for a project in Canada in a good location, in good infrastructure that's already permitted, we'll talk a little bit about if it's fully permitted. Good location, it's basically in a mining district. It's not in one, but considering the infrastructure and considering their neighbors, it's I can, like Brad mentioned, if he thinks it is a district. Strong management team. So this would be a question I'm going to be asking Brad about, taking this thing to production, how confident he is. Path to production, they have a very strong plan. This is, he's mentioned this. This is, I would say that the one issue on your checklist is your path to production. So this really is my confidence in Brad. So if I know the team, that I'm more likely to feel stronger about the path to production. They've already told us some of their plan. I think this DSO, they're going to talk a little bit more about it. But they've been making partnerships. They've been planning this out. They have a PEA coming out Q4. So I think all in all, I think their path to production is pretty strong. And then insiders, 40%. I was counting the numbers. My math was 40%. So as far as the checklist, so I'm looking, whenever I find a company that checks all 6, I buy it. And the reason why is because if you find enough potential 10 baggers, the chances are you're going to make a lot of money. You don't need them all to hit. You just need potential winners. And so this one really checked all the boxes. Like I said, the second they pivoted to development, I didn't hesitate. So my first question is permitting. You mentioned that this is a past producer mine on care and maintenance, but I'm sure you have to get some permits. How long will it take you to get fully permitted?
Yeah, so the pathway to permitting that we want to go down is basically a permit amendment. It's the same pathway that ASCOT went to get their permit amended up into production. So, we have an existing mine permit from the 1980s. In order to amend that permit, we have to do environmental baseline work, which is about 2 years of studies. And then you have to do a feasibility level study to submit that mine permit. Once you have that permit amendment application in hand, ASCOT took 8 months to get their permit. So the total timeline for us to amend their permit and be able to be in production, we figure, is about 36 months.
Okay, so that pretty much answers that question. So that's a bit of a red flag. So we're going to have to wait 36 months before we get paid, basically. This stock's not going to go to, $300 million market cap until they get that permit. It's my guess, but it'll probably go to 150 from here. Okay, my second question is, and I think you just mentioned it. You're basically going to do a PEA in Q4, and then you're going to try to get the DFS out in 26. And then once that DFS is out, you'll be 8 months out, because once the DFS comes out, you'll submit your permit, right? So that's kind of the timeline. So tell me about kind of what you're going to do from now until you get that DFS completed.
Yeah, so we're doing the bulk sample now, which is going to be a proof of concept of shipping that product overseas and try to recoup some additional metallurgical information, comminution testing from it, and then obviously there'll be some proceeds from that bulk sample. We're expecting around 3,000 to 4,000 tons of mineralized rock, above 10 grams a ton, for that bulk sample. You're going to have your PEA, and we're going to do a number of trade-off studies. We are planning to skip over a pre-feasibility study. Like, the internal scoping numbers have a very high margin project here. And, we don't, so just to explain the DSO project. So we're mining at site, we're crushing at site, we run it through an ore sorter to upgrade the product. We're looking at 2 to 3 times upgrade factor based on the initial study that we've done on DSO. And then we're shipping that product out overseas and down the road. So the amount of product shipped is much less. So the trucking costs are, proportionally much less than that. And then the shipping overseas is quite affordable, given that we're in a shipping lane and we're right by a bulk shipping facility. But with all that said, there is no tailings facility. There is no mill. It becomes a very simple project to design and develop from that perspective, and hopefully to permit as well. That would be our guidance on that as well. So without those, it's quite conceivable to go from PEA right to feasibility. We're doing like geotechnical right now on site. We're doing geotechnical at a feasibility level so that we don't need to duplicate this work between the studies as we go forward. So we are de-risking it through those studies over the coming year.
Okay, my next question is exploration. And, I've always thought this is at least a 3 million ounce project, just based on the initial drill holes. I mean, the reason why I say that is because a guy did a study a few years ago, and he basically took all of the existing discoveries and mines historically, and he looked at the biggest gram meter hole. And basically what he found was, if you find a big gram meter hole, you find a big mine. And Blueberry's had several big gram meter holes, right? So if it follows historical norms, it should be a big mine. What are your targets? A lot of companies, they'll tell us, okay, this is our target. So do you guys have targets for the size of your deposits?
Yeah, I'd say that, we're targeting easily 2 million ounces. I think that is our, we have eyes on where we would go to look for 2 million ounces. Michael Gray with Agentis, he's an analyst. He's looked at the project. He sees 3 million ounces. We've got a 6-kilometer trend around. Our primary structure is around the margin of an intrusion. These are the part of the resource right now is 2 small parts along that intrusive boundary. So yeah, I can see us expanding to that kind of potential very easily. But we're targeting the first 2 million ounces now, and that's en route as we continue to do the work that we're doing, like the baseline work and the infill drilling that we're doing. We're doing expansionary drilling, and we're testing new targets outside of that to show that we have that potential. The big thing with the DSO is to put the underlying value of what is an ounce of ground worth now, and if we find an extra million and a half, what is that worth? The big thing for us is you don't need a multi-million ounce deposit to make this thing make sense from a production point of view. If you don't need to build a mill or a tailings facility, if you can offload those capital costs to somebody that already has the equipment, the smelter overseas, then this thing will make money at sub 1 million ounce deposit.
Okay, this is kind of where I ring the bell. So basically what he just said there was, they're fairly confident things are going to go to 2 million. So I'm valuing this company as a 75,000 ounce producer. And I use $5,000 gold. Everybody knows I always focus in the future. I don't care about $3,300 gold. Doesn't mean anything to me. I don't invest for the next 6 months. I don't invest for the next 12 months. I invest for the 24 to 36 months out. I mean, we can see what gold's been doing. Gold's been trending higher. So my thesis has been working. So if I look at $5,000 gold, their free cash flow at 75,000 ounces is it's over $200 million. So somewhere between $250 million in free cash flow alone. That's at 75,000 ounces. If they find 3 million ounces, which is the target that many have on this project, that takes production. Maybe it doesn't double the free cash flow to 400 million, but it increases it substantially. So my 15 bagger is based on 75,000 ounces a year. That's why I said I'm ringing the bell here. So basically what I'm saying is my 15 bagger is very conservative. If you're investing for 3 years down the road. So in 3 years down the road, these guys are going to be drilling for the next 3 years as well. So in the next 3 years, if they start looking at numbers, if people start seeing this thing's going to be over 2 million, then you can see that my target is low. My target is conservative. My 75,000 ounce a year production target is too conservative. This is the reason why he's had no trouble raising money, because they see the same thing I see. This is why 5 of his investors own 40% of the company. It's somewhat tightly held. It's going to remain tightly held, which is also I don't even use this as a data point. It's like cherry on the cake. Whenever you have a company that's tightly held, what that does is it makes it very explosive. So this is a stock that's basically going to double and double again, probably in the next 12 months, just because it's so cheap and nobody really is caught on to the story. But I've been following them. I understand it. So I can see exactly where it's heading. Now, I've gotten excited about stories like this before. So the one heads up I want to say is never expect a development story to be a slam dunk. Development stories are never slam dunks. Development stories always break your heart. You don't, like I said, you don't find a 10 plus bagger, and this one is actually bigger than that. It's 15 plus bagger. You don't find these and think they're slam dunks and you put everything, you put all your chips in, I'm kind of all in, right? They will break your heart. As a matter of fact, 80% of the time they break your heart, which is kind of crazy. So you try to find the ones that check all the boxes that give you the most odds of winning. And this one definitely does. This one definitely gives you, it's one of those ones that should be in that, it's basically an 80-20 rule. This one's definitely should fall in that 20% bucket. If it doesn't, I'll be very disappointed. But definitely excited about it. I think you can hear it in my voice. Normally I asked a ton of questions, right? I only asked 3. So that's a good sign, Brad. It's a really good sign. And I actually haven't raked Brad to the coals and basically said, wait a minute, Brad, unless you do this, it's not going to work. I haven't really found kind of the red flag, kind of the weakness. And the reason why is because they pretty much have a very good situation here. I mean, all they have to do is get that gold out of the ground, sort it, put it on a truck, and say, "See ya, come give me my paycheck." Right? I mean, that's kind of the story here. So, I mean, it's really going to come down to like 3 things, right? The price of gold going up, inflation not killing them on cost, so they get high margins, and I'm not sure what the third red flag is. I think those are the 2 biggies, right? I guess the third one's going to be exploration success. But even if they don't get exploration success, if they have weak drill results, it's still a 1.5 million ounce deposit. So that's not even a red flag. So yeah, this one's pretty beautiful. I didn't buy enough shares. That's the bottom line. I didn't buy enough.
Well, let me say, I'll just jump in there. Maybe you could ask Thomas one more question is, who's going to actually do the mining? Like what we didn't speak about is Sean Massey coming and joining our team. a very big piece of news, and we didn't come up. Maybe you could just give an introduction to who's doing all our engineering and why he chose to. Yet another. Now you didn't come with a big bag full of money, but we also got one of the best mine engineers, builder, operators for British Columbia. I can't imagine anyone better. But maybe you could give a plug in for Sean, Thomas.
Sure. Yeah. So Sean Massey joined our team in May this year. Sean's biggest job before us was he was the GM, the general manager of the Bruce Jack mine, and did that from Pretium to Newcrest and then Newcrest to Newmont. Before that, he worked for Comess. Helped build New Afton, the new gold mine there. So, I mean, he's been around BC. Barkerville was another one. I mean, he's a BC mining engineer through and through. And I mean, yeah, we're delighted to have him on the project. Been super helpful and super knowledgeable for working in this terrain, this area. He knows everybody around from a mining perspective, and he has the production and the construction experience in his back pocket.
Okay, so I do have another question. So you have 3 drills turning. So how many meters are you going to drill in 25, and how many meters are you going to drill in 26?
We're drilling 25 to 30 this year. And, that would be my base plate for what we're doing next year based on where we're at today. That decision won't be made until we get all our results back, but I would say it'd be another big program next year of that kind of scale.
And so Brad's the CEO. Thomas, exactly what do you do? Are you the COO or?
I'm the president. I was previously the VPX, and so I was on the ground deciding where we were drilling, and now kind of just running the entire project from studies, the environmental.
Kind of the COO, right? You're kind of the operation officer.
Well, Sean's the COO, so I can't take that title from him. I do outside of that into marketing and the technical studies as well. But he's kind of head on the ground engineering, and I'm more of the geology and anything else permitting outside there.
Okay. All right. Okay. I'm good, Brad. Good story.
Well, thank you very much. Well, you've got to watch it over the years because, I mean, we met, at least you got to see us 3 years ago, Don. And so you've seen that, we've accomplished what we said we were going to accomplish, and I don't see us changing that tactic at all. So
you could have. Brad, you could have told me back then you were going to pivot to development. I could have bought your stock half the price.
No, you couldn't have. You bought it at the same price. You're not missed out on anything. Maybe you can say this for the investor. You can buy my stock today as cheap as Ross Beatty bought it, as cheap as Franco. We are literally at the low. I haven't sold stock at this price since 2000. I think this is the same price we did before we drilled our first hole, Thomas. Yeah, because we did a little rollback somewhere along the lines. I mean, I came into this company and had this many shares that we have now. So, no, nobody's missed anything. And again, just focus on that market cap to value, right? Price and value. Yeah. So you haven't missed out on anything.
Okay.
Great. Well, thanks, Brad, and thanks, Thomas, for your contributions today. We'll take a closer look for those listening. SCTSF in the States and SCOT in Canada. Very interesting story, and we appreciate your time, guys.
I appreciate it, guys. Thank you.
Right. Thanks
for joining us. So, Don, it's interesting. I have a lot of people that aren't paying clients in my network, but one of which is Shad Marquise, who writes for Substack like yourself. He's under Excelsior Prosperity, really good writer. And I'll introduce you guys to Beaver Creek. He's a friend of mine. He's huge. He's got a huge following on CEO.ca. He posts under Excelsior there as well. And he turned me on to Scottie about a year and a half ago and said, "Man, this thing's so cheap." And it wasn't on my radar at that time, but we own a little bit of it. The news that just hit, recently here with this financing really woke me up. First, it was Sean coming on board from Bruce Jack, right? Because this guy can obviously choose where he wants to go. Like, he worked at Bruce Jack, but also New Afton, Chemist. Like, these are major wins, in that part of Canada. And that was in May. And then they came out with this news here this summer regarding the financing. I'm like, man, they're pulling in a lot of cash. And the share count isn't blown up, which, you and I both love. So it checks a lot of boxes for me as well.
Yeah. Like I said, when they pivoted to development, all I had to do was go look at the valuation, and it was like I didn't hesitate. I bought it 2 cents less than it is today, so it hasn't jumped. I mean, I forget when they did this. I think it was last month. I think when they pivoted to development.
Mhm.
It hasn't moved. I mean, they pivoted to development. The stock hasn't moved, which is crazy. I mean, what is it where's the problem with this project? It's almost like it's getting tainted by ASCOT. It's basically
Oh yeah, there's definitely some
similar geology, and it's
for
getting
sure.
tainted by ASCOT. But this is a whole different story. All they're doing is pulling the dirt out of the ground, putting it through a sorter, and putting it on a truck. So it's a lot easier than trying to put it through the mill and hit the grade number. I mean, the reason why Ascot failed, or haven't failed yet, is because the grade was too low. They were mining like 2.5 grams, but these guys with their sorting, it's not going to be, the sorting is going to raise your concentrate up. So I don't see that as a big risk. The type of geology it is, but yeah, I mean, I went over my list. I showed you guys the check boxes, and it seems to check all the boxes. And the killer here is the valuation. I mean, $38 million. Are you kidding me? It's like I keep seeing these companies that are valued at 50%, 25% of their value. These guys are definitely 50%, but they probably are 25% where they should be, but based on where they're going. The resource probably doesn't mean it's valued at 25%, but if you look at where they're actually going, it probably is valued at 25% of what it should be at. I mean, if you kind of read between the lines here and you recognize that this thing is a 2 million ounce project in a good location with infrastructure, with low capex, I think it's ridiculously valued. I keep seeing these companies over and over again, and I'm blown away by where we're at here today. It's like nobody cares about mining stocks. I think it'll turn. I really do.
Yeah, great assessment there. It really is flying under the radar, and there's so many good values still left in our sector. And what's amazing is that you're finding value in gold explorers and developers. Like if this were nickel, where it was like getting trounced because of the Russia-Ukraine situation, you could point a finger to that and say, okay, I might understand that. We just had Stillwater on, you and I, PGEZF. That's a heavy nickel project. It's 45 to 47% nickel, but it's getting some love. So there are stories like that are even getting some love. I think it is the proximity to Ascot. I also think, as Brad pointed out, he hasn't marketed this company. They took the foot off the accelerator last year. I think now when you look at their news items, they're going to start pressing forward. I wouldn't be surprised to see these guys at all the fall conferences, just telling their story out there because they've got a lot of things to talk about now. And they're drilling, right? 3 rigs turning, a fourth they're trying to get started here in the next few weeks. That's going to add for some love here in the fall with their PEA coming up and just general assay results, right?
Yeah, so they're going to drill 50 to 60,000 meters between now and the DFS. So
That's a lot.
it's going to add a lot of ounces. That is a lot of holes. So that's very positive. That's why he's raising money right now. All that money is for drilling. So, yeah, I think I need to add a few shares here. I don't think I bought enough.
Me too.
I always like to have a minimum. It's at my minimum, but when you really like companies, you want to go above your minimum.
Yeah, for sure. We're in that kind of market. I mean, I think a lot of investors still have a hangover from the last decade, right? Where they just see a stop and a start like 2016, then they have the malaise of 17, 18, and 19, and then 2020 happens, but it was brief, and then they get another, few bad years in there like 22, 23, and they're just scratching their heads. But you gotta be resilient in this sector. It's hard to do, and that's why you and I get paid the big bucks, Don.
The miners, right? The miners are not getting any love for the gold price. I mean,
Yeah.
gold's 3,300, and You have $1,000 to $1,400 margins. The average is around, I don't know, 1,200, somewhere in there. You have these big margins, and the miners are not getting rewarded. They're not. It's almost as if Wall Street doesn't believe the gold price. It's like, no, this price isn't going to hold. It's going to crash. It's going to go back down to sub 3,000. That's kind of how these miners are valued. But if gold keeps going higher, I think all of these stocks are going to double fairly quickly to get back to where they're supposed to be at. I don't know when the bell's going to ring and all these stocks are going to double, but I think that what you're going to see is Newmont right now is trading around a 10 multiple. I think it's going to go into the high teens fairly when it finally breaks out, when it finally starts to move. It'll go into the high teens, and when it does that, it's going to reset the whole market. So right now, the average free cash flow multiple is around 7. I think it'll go up to about 10. When Newmont goes to 18, the average will go up to about 10. So you'll see about a 50% move across the board. So the lifting boat thing, it's going to lift all boats.
Right.
And once gold, I don't know where it's going to happen. I keep saying it's going to be the fear trade. The fear trade is when the stock market stops going up. People start jumping off the boat. They don't want to be in stocks, and they're like, "Where do I put my money? I got to put it somewhere. I got to rotate it." I think a lot of that money will rotate into the miners, and so Barrick, Newmont, AngloGold Ashanti, Lundin, Agnico Eagle, Northern Star, all these majors. I think a lot of money will rotate into those guys.
Yep.
Alamos.
And you just mentioned all those names you just mentioned are in GDX, and they're large positions, right? So we've already got a lot of the risk out of the way too, Don, when you look at it, because you got Newmont that already led on earnings. Agnico was July 30th. Alamos was July 30th. Kinross was July 30th. Like, we've had some major holdings in that ETF already produce results, and the ones that are coming, I'm not really worried about. I mean, you've got Barrick, yes, next week, so that is one to watch because they've had that issue with Mali, and that's about 15 to 20% of their revs, about 20% maybe. But really, you got Pan American, you got Franco, you got a lot of good names coming up, and I think they're going to miss that badly.
By the way, Kinross had really good numbers. So most of these companies are throwing up some really good numbers.
Yep, I agree. Well, Don, we'll leave it there. We'll be back soon with a couple of other names for you guys. Please, contact us if you're in the Colorado area or you're going to Beaver Creek. It's a great conference, September 9th through the 12th. Don and I would love to meet you and say hi. And if not, please go to our websites. Mine is fenneckconsulting.com, and Don's is pictured right there, goldstockdata.com. We'd love to work with you guys. So thanks for your time.